From Gen Wealth Financial Advisors, it's the fastest 4 minutes in investing.
And welcome in. I'm Scott Inman. John Shrewsbury with me for the Fastest Four. We thank you for watching on social media and for listening on the Get Ready for the Future show. Well, to say, John, that the markets have been on a bit of a tear since the election would be quite an understatement.
Yeah.
And things have been going really well, and there's a lot of optimism in the economy right now. There's a lot of optimism with the COVID vaccine now being distributed. So what could shake that up? That's always the question, right? When we hit those all-time highs, when things are going well, is it too good to be true? Are things going too well? I think we're going to focus a little bit on what could potentially sway the markets one way or the other, really, still, and that is this looming potential of another COVID shutdown rescue package.
Yeah, I think that Congress has been working on this, frankly, for months, and they are battling back and forth. The Democrats would like about a $3 trillion bill. The Republicans somewhere around a $900 billion bill, and we think that they'll settle somewhere around $1 trillion. But we think that obviously getting some COVID relief is a no-brainer because we are not out of the woods yet. Just because a vaccine is rolling out, it's going to take a lot of time for that vaccine to get out into the general public. Of course, healthcare workers are getting it first, and then the more critical patients that are more susceptible to COVID would get it, and then on to the general population. So we're going to be in this for the long haul, and frankly, there are a lot of folks that are going through shutdowns again.
Yeah.
Thankfully not in the state of Arkansas, but in a lot of other key regions in the country, we're seeing some pretty significant shutdowns.
Yeah, and we follow a lot of different analysts when it comes to this, a lot of different minds on it. Brian Westbury is one of them. He seems to still think that there is likely going to be a deal somewhere between that $900 billion to $1 trillion mark, and he believes that it is likely to pass before year end, and that would certainly be good news.
Yeah, it would be good news for the economy because the economy does need this help. Now, I hate debt just like everybody else, but this is not your typical recession where the government is throwing money to try to stimulate the economy in a normal recession. A pandemic recession is different, and I frankly don't know how some businesses are going to survive another round of shutdowns if there's not another similar type of paycheck protection program or something like that. Now, that being said, that is a short-term quit the bleeding type arrangement. We still have that to pay for years and years to come, and that's where the concern is, not only with taxes and how we're going to pay for it, but also the threat of inflation.
Yeah, the other thing we always watch is the Federal Reserve. They met earlier in the week, and they certainly remain in stimulus mode, John. So I don't think there's really anything that is on the horizon that would indicate anything that would upset the markets there.
Yeah, and I think that's really good from the short term, but I think that what we've got to watch for is there's been a ton of liquidity pumped into the economy over the past year because of the COVID situation. We've got to be able to absorb all that liquidity in a productive way because the classic setup for inflation is too much money chasing too few goods and services. And with goods and services being suppressed and all that money in the economy, then you've got the potential, at least, for a setup for inflation down the road. Now, the Fed is in a very accommodating mode right now, but we could see the Fed maybe step on the interest rate bandwagon a little bit more if we see that inflation factor heat up in the distant future.
Yeah, and everything we read still pointing to the beginnings of a new bull market. 2021, I think there's really almost a consensus even among analysts that 2021 could be a good year for the markets.
Yeah, bonds are not going to be very productive. About the only place that you can go get a return is the equity markets.
That's it for the fastest 4 minutes in investing. Again, thanks for watching on social media and listening. The Get Ready for the Future show continues right after this.